Hello viewers, we'll be going over natural gas. In this video, we'll be using the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for natural gas. So let's start off with the technical analysis. Today we're up 12.4%, and on the 1 hour chart, we're now overbought on the RSI after being oversold on the RSI on Thursday and Friday. As for the 4 hour chart, we also see that we made a nice reversal over the weekend. It was really oversold on Thursday, and then we are now overbought on the RSI, and we have now approached to positive MACD, and we are encountering a slight resistance on the 200 moving average on the 4 hour chart. As for the daily chart, we touched oversold RSI on daily RSI, and there's a decent possibility we may see a reversal, considering that if we do manage to close previous resistance level, we are above previous resistance, which is around a price of $1.67. If we do manage to close around this range right now, there is a good possibility the reversal is in play. And at the moment, we do see a convergence on the daily MACD. And if we do continue to head higher, there's the next possible resistance level being around where the 50-day moving average and 100-day moving average coincides, and that is around the price of $1.77. And we also have previous support levels around that range too. Since we're below support, that now act as our resistance. If we were to fall down lower, the next support level that I see will be around the 9 moving average, the blue line. And we also had previous support levels back then too, and that is around a price of $1.62. So if we do manage to continue to move higher, that price movement to hit resistance roughly around 1.9%, and to hit the next support down lower, that price movement to the downside is roughly around 6.6%. So now let's examine the day-by-day probability model for natural gas. And again, these models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 37% chance for natural gas to climb higher between 0 to 11%. And to the downside, or let's continue to the upside, we have a 12% chance for natural gas to climb higher between 11% to 23%. And to the downside, we have a 37% for natural gas to fall between 0 to negative 11%. And to the extreme case, to the downside, we have a 12% chance for natural gas to fall between negative 11% to negative 23%. So basically, it's quite even to the upside and to the downside among the next coming days. So now let's head to the day-by-day forecast for natural gas. So we have 1 day out, that will be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. So we have our current trend as a blue line, and overlapping it happens to be the best match. And right here we have our current trend, and the trend below right here is the trend that we found on the line graph above. And this trend dates back to September 16 to December 10, 2009. So let's begin comparing the both trends. So what we have here on the current trend, we start off at the upper Bollinger Band, proceed to touch the bottom band, once more touch the upper band, and then we see an average below the middle Bollinger Band. And what we have here is we start off at the upper Bollinger Band, then touch the bottom band, once more attempt to touch the upper Bollinger Band, and then towards the last half we see it average below the middle Bollinger Band. And one thing to note on the trend in question that we found, at this chart or trend, we have now reached the middle Bollinger Band. Compare that to the current trend. So we have a bit ways to go to reach the middle Bollinger Band. So the trend in question is more forward looking compared to the current trend. So it will take time for us to reach to the middle Bollinger Band. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was September 16 to December 10, 2009. Back then, natural gas was up around 5.7%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 37% chance for natural gas to climb higher between 0 to 11%. And let's examine closer on the technical performance of each trend. The trend that we're currently in is currently down 43% from monthly high, up 11% from monthly low, up 2.6% from 10 simple moving average, down 3% from 20-day simple moving average, and down 13.7% from 50-day simple moving average. And now let's examine the trend that we just found. Back then it was down 24% from monthly high, up 13% from monthly low, up 6.7% from 10 simple moving average, also up 6.7% from 20-day simple moving average, and down 4.3% from 50-day simple moving average. So there are technical differences. One is in the 20-day moving average. Back then, natural gas was up 6.7% from 20-day simple moving average. Compare that to the trend right now, which is down 3% from 20-day simple moving average. So do keep that in mind. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.